Welcome to NorthStar. ANCO sells products on account and experiences the following collection schedule. In the month of sale, 10%. In the month after sale, 60%. In the second month after sale is 30%. At December 31st, ANCO reports accounts receivable of $211,500. Of that amount, $162,000 is due from the December sales, and the balance $49,500 is due from the November sales. ANCO is budgeting $170,000 of sales for the month of January. If so, what amount of cash should be collected in the month of January? Let's start our calculation. How much is the sales for January? So January sales is given as $170,000. And out of this 170,000, how much will be collected? So out of this, collection will be 10%, because it says in the month of sale 10%. So 17,000 will be collected in the month of January itself. Now how about November and December sales? Let's write that. November sales and December sales. So the collection pattern is 10%, 60% and 30%. So whatever we have sold in November, 10% must have been collected in November, 60% would have already been collected in December, and how much will be collected in January? So in the month of January, this 30% shall be collected. If you have understood this, let's go to the number. How much amount is the balance accounts receivable? 49,500 is from November sales. So whatever we have sold in the month of November, 10% is already collected, 60% must have been collected in the month of December, and the balance 30%, which is equals to 49,500, shall be collected in the month of January. So from November sales, how much will be collected? 49,500 full amount shall be collected. Now let's look at the other sales. November, December, January and February. We will look at which sales now? We will look at December sales. So again, sales pattern is collection is 10% in the month of December, then 60% in the month of January, and in the month of February another 30% shall be collected. This is the collection pattern. So whatever we have sold in the month of December, I will repeat again, 10% will be collected in December only. 60% of the total credit sales will be collected in the month of January, and the balance shall be collected in the month of December. So how much is the accounts receivable balance now? As of now, the total accounts receivable balance from the December sales is 162,000. Now the question is, entire 162,000 shall be collected in the month of January? Answer is no. Why no? Because some portion of it will be collected in the month of January, and the balance portion shall be collected in the month of which one? February. Yes. So two options. We can do it in two ways. Divide this in 6:3 ratio. This is one way of doing. Remember, not 60% and 30%. Don't do 1,62,000 into 60%. No, it will become wrong. It has to be in 6:3 ratio. How to do that? 162,000 divided by 9 multiplied by 6, we get 108,000, and 3 we get 54,000. So out of 162,000, only 108,000 shall be collected in the month of January. This is one way of doing it. The other way of doing it is $162,000 represents how much percentage which is outstanding. It represents 60% and 30%, total 90% outstanding. So we can say divided by 90%. When we do, we will get 100% value. And what is 100%? The total sales is always equals to 100%. And then we can multiply with 60%, which shall be collected in the month of January. So $162,000 divided by 90% into 60%, you will get exactly same number, $108,000. So this is the amount which shall be collected in the month of January. How much shall be collected in the month of February? This balance 54,000. All right. Or you can do multiplied by 30%. This balance 54,000 shall be collected in the month of February. Let's take this 108,000 on top from December sales, $108,000. What is the total collections? 17,000 plus 49,500 plus 108,000, $174,500. This is the total collections for the month of January. So the correct option is option B, $174,500. Thank you.